There's no stopping our housing markets as house prices keep rising over the month of April. In today's Property Insider video, Dr. Andrew Wilson shares his latest My Housing Market data about what's happened to house prices and dwelling prices around Australia, and they've been rising over the last 3 months. If you want to keep up to date with our real estate and housing markets, please subscribe to this YouTube channel and click the little bell icon so we can let you know each time a new show comes out. Australia's property markets have been through a rollercoaster ride over the past few years, through pandemic-induced uncertainties and economic downturns, to soaring prices and high demand all around Australia, followed by that cyclical downturn in 2022. Boy, the markets have seen their fair share of ups and downs. And now that we're a third of the way through 2023, it seems like the property pessimists, the property bears, have gone back into their caves to hibernate as our housing markets have defied 10 increases in interest rates that the Reserve Bank's thrown at us, and the value of both houses and units have kept rising around Australia. So as we come to the end of April 2023, I'm looking forward to Dr. Andrew Wilson's latest housing market update to see what's happening around Australia. Hi, Andrew.
Yeah, good day, Michael, and well said, of course. And I guess now we can say that the rebound, the recovery is consolidating. My Housing Market's latest data is reporting now the third consecutive month of increases in, and these are rolling quarterly models that we use, so they're quite robust. Plenty of data sets here, and we're now seeing the third consecutive month of quarterly price increases over April. Now that's both for houses and for units, so it hasn't been just a one-off that some of those that were predicting price crashes were trying to speculate. Perhaps the early recovery was just a one-off and it wouldn't consolidate, but certainly it has consolidated. And moving forward, we can expect, I would believe, more price rises. But a lot of this is, again, in the lap of the Reserve Bank, and we're likely to see more action from the Reserve Bank, I believe, following that surprise pause that we had over April. Reserve Bank is under some pressure now. We know that it's going to be reformed, and I think that most are expecting interest rate increases to come. But no doubt our housing markets, as you suggested, Michael, have clearly shrugged off those 10 consecutive increases in official rates last year. And off the back of a booming economy, we now have our third consecutive month of increases in the national house and the national unit price, Michael.
Well, Andrew, you forecast this at the end of last year with your asking price index, and then you were one of the first to show this in your monthly housing indexes, and all the other research houses, and now the banks have come to the same conclusion as well. Some of the pessimists said, oh, it's a dead cat bounce, it's going to flop. Let's be clear, not all markets are rebounding yet, and that doesn't mean there aren't going to be some further falls, as you say, depending upon what the Reserve Bank says. But overall, we're not going to have a crash, are we?
No, well, that's we've never really had a crash, Michael, so it would be remarkable. And it is fertile ground, of course, for a clickbait headline, house prices crash, but the reality is it's a fantasy. And you mentioned that obviously local markets perform differentially, and the Sydney market has led the way up this year. It's increased its median house prices up by 3.2% so far this year, Michael, which is clearly the best performer of all the capitals for the year so far, but it's still 6.9% below where it was at the same time last year, Michael. So I guess that fear of missing out energy, not just for Sydney, for the other markets, will start to drive markets even higher because prices are rising. And yet there is that value aspect because prices are still below where they were a year ago. So I think we'll see that create some momentum in our markets. But just mentioning that differential scenario with some housing markets obviously performing better than others, I think it was very instructive, Michael, that every capital city market recorded higher house prices over the April quarter, which I think shows us, and we've seen that gradually increasing from just a couple of capitals recording higher prices earlier in the year, and now we're seeing a more expansive increase in house prices in terms of capital cities. And now for units, almost the same story for units. And some of the smaller unit markets, Michael, are volatile. because there are fewer observations, of course, so they can bounce around. But the latest data that we have at My Housing Market has only one capital city down over April, and that was Hobart, which is a very small market for units. But all the other capital city markets have recorded increases in their median unit price. So there's more and more good news, I think, Michael, not just on the national price, which of course reflects what happens basically in Sydney and Melbourne, and to a lesser degree Brisbane, because it is a weighted average based on listing numbers. But also we're now seeing other capital cities now moving ahead in terms of house price growth. And, I think the outlook particularly for the remainder of the autumn selling season is very positive.
Well, if we look a little bit further than the autumn selling season, we can also see reasons why the housing market's going to continue over the year. Increased migration.
Yes.
Anyone who wants a job has got a job.
Yes.
Wages are creeping up a little bit. And the Reserve Bank, despite the interest rate rises, doesn't seem to have stopped our appetite for spending. That's keeping booming our economy.
No, look, it's remarkable, Michael, that in the month since, nearly the month since we had that, shock decision by the Reserve Bank to have rates on pause after 10 consecutive increases, we've seen nothing to indicate that those 10 increases have done anywhere near or have even started to do the job that the Reserve Bank was hoping it would do, and that is to reduce inflation. We will have the latest inflation data out, and the latest data is 3 monthly, so it's again backward looking. But I guess the more real-time data that we have in terms of demand in the economy, such as retail sales and the housing market, and of course the labour market, is clearly showing continuing almost unprecedented strength, particularly in that labour market, Michael, where for 2 months in a row now, we've seen jobs increasing, the number of unemployed falling, record low unemployment rate on the monthly survey, and of course a near record participation rate. So higher interest rates have done absolutely nothing to slow this economy down, and retail sales are still high and growing. We're going to need more signs surely before the Reserve Bank can think about having any sense that its monetary policy over the last 12 months has been in any way successful or has started to improve the inflationary outlook. And if anything, that rate pause really did act as a catalyst for even higher confidence in the housing market over April.
Well, clearly, confidence is one of the factors that drives the market, and buyer confidence is back. There's already not the real FOMO, fear of missing out, but fear of missing the bottom. People are seeing that the prices are going up, so we're noticing on the ground a definite increase in buyer inquiries, people wanting to get their ducks in a row, and sellers' confidence is seeming to increase as well, Andrew.
Yes, and look, Michael, if you'd been waiting for the bottom of the market, well, you've clearly missed that. That was January, which is 3 months ago. So, of course, we are a hostage to the data as it does come through, but markets are clearly up and running, and the latest auction clearance rates, which we do discuss in our shows, is now consistently in the 70s, particularly in Melbourne and Sydney, and that does represent an emerging seller's market. And once we get all the April holiday distractions behind us and move into May, I'm sure we'll continue to see a consolidation of what's been clearly a rebound in our housing markets. But I think the important thing to note, Michael, is even though we've had these 3 consecutive months of growth, the national house price is still 4.5% lower than where it was a year ago. So there's still some pretty good value in that marketplace, and within the environment of one of Australia's strongest ever economic performances, particularly in terms of the labour market, and wages rising at the fastest rate in a decade, and people are feeling pretty good about themselves, I think, Michael, and hence they're back in the housing market.
Yes, they are. Now, I know this is confusing some people, those who haven't lived through a number of cycles as you and I have. The market's just doing what it always does. The long-term trend is up. And yes, the market doesn't always go up. There are ups and downs, and various markets are fragmented. And within each state, there's houses and units. There's inner city, middle ring, outer suburbs. There's townhouses, apartments. So therefore, they're all working at different paces. They've all got their own little market cycles. But over the long term, the trend is up, and the downturns that's just part of it. And they often last a year or 18 months. It's done much the same again, Andrew.
Yeah, very strong growth followed by shallow downturns, and then recoveries coming after that. And once again, we've seen the pattern. Of course, all the doomsayers are looking pretty silly again, and but they should be used to that. It's been a pattern over the last 5 years or more, particularly the big banks. I'm not sure how they continue to get it so wrong.
Well, the banks are changing their forecasts, Andrew. The problem, of course, is a lot of people are making their home buying decisions or investment buying decisions based on what the bank economists are telling. But it was interesting to see that the bank with the big red logo changed its forecasts and said, hey, we've passed the bottom of the market now.
Yes, just look back to see what those forecasts were 6 months ago, Michael, and you can have a little bit of a giggle, but it's the same thing that happened through COVID and the same thing that happened in 2018. Same story of doom and gloom, which just never eventuates. And you think those that have a vested interest in the housing market, such as our big banks, would have a little bit more competence in terms of forecasting what's happening in the housing market. Just look at the history, Michael. The worst result we ever had over a year was 5.5%. So where do these 10, 20, 30% fall forecasts come from? Certainly doesn't come from history. No wonder they're always wrong.
Well, look forward to catching up with you in our regular weekly Property Insider chats when we next catch up, which will be in about 10 days' time. We're going to have the Reserve Bank decision, so there'll be lots to talk about.
Yes, that's right. And our latest rental report as well.
Fantastic. Thanks, Andrew.